Hi everyone, today I'm analyzing Lululemon's recent earnings report, a tough one for the brand. I'll break down where things went wrong, look at the bigger picture and explore the long-term potential, fair valuation and key things to watch. If you enjoy my content, please like the video and subscribe, it really helps more people discover this channel. And before we start, disclaimer, nothing here is a financial advice, I'm just one person with a microphone, always do your own research. So first, let's start with the price action. So after the earnings, as you can see, Lululemon had strong sell-off. It sold off more than 15% in 1 week. Now let's go to some reasons why did the company had such a weak week in terms of price action. For the second quarter of 2025, net revenue increased 7% to 2.5 billion, which is good, or 6% on constant dollar basis. America's net revenue increased 1%, while international net revenue remains strong, increasing 22% or 20% on a constant dollar basis. Comparable sales, which are the stores that are open more than 1 year, increased 1%. Now we come to the first weak point. America's comparable sales decreased 4% or 3% on a constant dollar basis. International comparable sales increased 15% or 13% on a constant dollar basis. Gross profit increased 5% to 1.5 billion and gross margin decreased 110 basis points to 58.5% from 59.6%. Income from operations decreased 3% to 523.8 million and operating margin decreased 210 basis points to 20.7%. The effective income tax rate for the second quarter of 2025 was 30.5% compared to 29.6% year over year. Diluted earnings per share were $3.1 compared to 3.15 in the second quarter of 2024. Even though it was a slowdown compared to the last year, they beat their own estimates of $2.90. The company repurchased 1.1 million of its shares for a cost of 278.5 million, and the company added 14 new company-operated stores during the second quarter, ending with 784 stores. So we can see from here, like, the bad things are that they miss their revenue, because they missed their revenue estimates. Their estimates were 2.54 and they reported 2.52 billion, and comparable sales in America decreased 4%, while overseas they are increasing. And the last thing that was bad, it was the margins, like the gross margin decreased 110 basis points while operating margin decreased 210 basis points. The other thing that was very critical for this earnings report that was bad for the price action is that they now expect the revenue to be in range from 10.85 billion to 11 billion, and that was cut from the previous guidance, which was 11 billion to 11.3 billion. And the new earnings estimate is $12.77 to $12.97. This is also lower from the previous estimate of $14+. And the guidance assumes the tax rate of approximately 30%. And the one thing that I think the market currently is not considering is that the guidance does not reflect potential future repurchases of the company shares. Now, I will talk a little bit about why I think that market is currently overreacting, and I will address some of the biggest critics. One would be that they don't have the strong moat, and another would be their compression of the margins. So let's start. First, Lululemon's community strategy is built around the mantra Sweat, Grow, Connect. Sweat represents the brand's root in movement, from yoga sessions to global run events like CVs. Grow reflects personal development through workshops, mindfulness practices, and ambassador-led programs. Connect highlights the thousands of local gatherings, run clubs, and in-store activations that bring people together. In other words, what I want to say with this is they organize a lot of events that are sponsored by them. So with this, they managed to make Lululemon feel like more than just clothes. Another bullish reason for this company that makes me bullish is that they said that in the long run they plan to have approximately half of overall revenue to be from their international vertical. And now what we can see is, for example, look at Nike. Nike is having 44% from North America and 56% from the other parts of the world, while Lululemon currently has 75% from Americas and international part is 25%. And this is exactly where I see a growth opportunity for Lululemon is from international vertical. So yes, I understand they now have problems because Americas are showing slowing revenue and compression of the gross margins and operating margins, but I think the market is currently really overlooking their perspective from the growth from international revenue. Now, back to the technical analysis, we can see that Lululemon is again approaching oversold levels based on RCI weekly. This is the indicator that the last time was triggered in the August of 2024. If you would like to explore more of my work, visit my website. You'll find everything from my Substack articles to educational content, including an options trading guide for beginners with interactive quizzes to test your knowledge. If you're passionate about the stock market and crypto, it's definitely worth checking out. Let's look at some basic ratios. Like for example, here what you can see, I have like for the price earnings, I have like shares outstanding, closing price, market cap, net income, and here I have the price earnings. I have the last decade, so last 10 years, and here I have some assumptions based on their newest earnings and revenue guidance, and we can see that average price earnings ratio is 42 and the current price earnings ratio is around 12. So this would suggest that there is 72% of theoretical undervaluation, which gives a potential theoretical price, minimum theoretical price of $289 and $289. Now we can look at price to sales ratio. Also I have the data from the last 10 years and we can see that the average price to sales ratio is 5.86 and currently it's a little less than 2, which suggests potential upside of 68% or that minimum price should be around $282. And lastly, we have price to operating income ratio. We can see that currently they are around 9 and the average is around 28, which suggests a potential 67 or let's say 68% undervaluation, which suggests that minimum theoretical price should be $281.8. And when we take the averages of those three values, we get average potential price of $284.42, which suggests a potential 69.3% increase. This what I just showed is just one way of modeling, and what we need to remember, all models are wrong, just some can be useful, but for me, like based on my analysis, this is like the minimum theoretical price that companies should be valued at. Now for comparison, let's look at Nike financials. And when we look, this is for 2025 fiscal year, their total revenues is 46 billion and gross profit is little less than $20 billion, which would give gross margin of around 43%. Why am I mentioning this? Because market is currently scrutinizing the Lululemon's compressing margins. But as I said before and mentioned, like they had for the second quarter margins of 58.5%. Like they fell down from the quarter year over year, but still 50+% is pretty elite even among its peers. And when we look at the operating income of 3.7 billion compared to the total revenues, that would be that would give an operating margin of 8%. And then again, when compared to Lululemon's 20%, we can see that Lululemon still has pretty elite margins despite its current pressure. Now I came to some conclusions. International expansion is still in its early stages, presenting a clear long-term growth opportunity. As I said before, like we can see that current revenue streams is 75% from the Americas and 25% from the other parts of the world. The company's stated goal is for international markets to eventually contribute about half of annual revenue. Margins remain strong and resilient despite ongoing pressures, positioning Lululemon among the elite in its competitive set. And this is fundamentally a long-term investment story. A meaningful rebound will take time, but the growth verticals are clearly defined. We just need both the market and management to place greater emphasis on international expansion. Like on the last earnings call, I think there was too much time spent on the negatives, while they literally spent like 1 minute speaking about their international growth. I think they should focus more on international growth because this is a big part of their story and of their future. And there are also some risks that we should should be aware. After the latest earnings cut, what I'm very concerned about is their ability to meet their revenue expectation by 2026 of 12.5 billion. I mean, growth will likely continue, supported by new store openings, but any failure to meet this long-term goal could be harshly punished by the market, especially when issuing 2026 guidance. I'm concerned about this because when looking at their last year revenue, it was 10.7, and the year before that it was 10.5, so we can see that it showed very little growth. Now, after their recent guidance to have around 10.85 or 11 billion, let's say they have $10.9 billion, that would be growth from 10.7 to 10.9. And then I have a hard time to believe that they will be able to grow from 10.9 to 12.5 in just 1 year after having slowed down in the 2 years. So this is something to watch for. In the fourth quarter earnings call, when they will be issuing guidance, this could be another factor that could put selling pressure on the price. Management has yet to successfully shift the narrative towards positive, such as international growth, as their latest earnings call demonstrated, and from a macro perspective, tariffs remain the most significant headwind. That wraps up my breakdown of Lululemon, the good, the bad, and everything in between. If you enjoyed this video, don't forget to like and subscribe so you don't miss future content. Thanks for watching, and I'll see you next time. Bye.